Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The country's budget deficit is expected to narrow to 3.1% of GDP by 2030. President Ferdinand Marcos Jr. admits there are questionable items again in the 2026 spending plan. BMI, a unit of Fitch Solutions, expects the Bangko Sentral ng Pilipinas to keep easing monetary policy until 2026. Let's take a look at how global markets moved overnight, with trading shaped by holiday closures in the United States and by healthcare gains driving European stocks. U.S. stocks were closed Monday for Labor Day. In Europe, shares moved higher, boosted by healthcare stocks after data showed Danish drug maker Novo Nordisk's weight loss drug Wegovy offers better heart protective benefits than rival treatments from U.S.-based Eli Lilly Healthcare. Healthcare led these sectoral gains.
Wir haben gerade letzte Woche gesehen, dass in der Wirtschaft aktuell.
And we saw just last week that the mood in the economy is not positive at the moment. But there is still hope that the new German government can have a positive influence. You can see everywhere in consumer confidence that we simply need positive impetus here, because the hope that things will get better in the immediate future, in the next few weeks, is still there, and such a dispute tends to dampen it.
London's FTSE picked up 0.1%, Germany's DAX edged higher by 0.6%, and France's CAC 40 was flat with an upward bias. Fiscal targets are in focus. The country's budget deficit is expected to narrow to 3.1% of GDP by 2030, a goal that will test government discipline amid high debt and spending pressures. Budget Secretary and DBCC co-chair Amenah Pangandaman says this outlook reflects the government's fiscal framework. The discussion came after Senator Panfilo Lacson questioned whether the Philippines could ever achieve a balanced budget, given its consistent deficit. As the government continues to run on a shortfall, Lacson noted it will have to rely on borrowing to fund programs and projects. Finance Undersecretary Carlo Adriano added that the deficit will steadily shrink to 1.325 trillion pesos by 2030. Factories keep moving, but just barely. Philippine manufacturing expanded in August, though at its slowest pace in 2 months, highlighting pressure from global demand and new U.S. tariffs. S&P Global's Philippines manufacturing PMI came in at 50.8, slightly lower than July's 50.9. A reading above 50 signals improving operating conditions, while below 50 indicates a decline. S&P Global economist Mariam Baluch said that the sector showed subdued performance, with output and new orders growing below historical averages. This comes amid a muted rise in demand and the impact of higher U.S. tariffs. Rate cuts are still in play. The Bangko Sentral ng Pilipinas is expected to keep easing monetary policy until 2026, a signal that lower borrowing costs could support growth but also test the peso. Fitch Solutions BMI unit says that this outlook is supported by benign inflation and slowing growth. BMI expects another 25 basis point cut in the fourth quarter, most likely in December. Last August 28th, the BSP cut rates by 25 basis points to 5%. Governor Eli Romblona Jr. had earlier signaled one more cut this year. BMI also noted Romblona's sweet spot remark as a sign the central bank may hold steady at its next meeting in October. The budget battle heats up. President Ferdinand Marcos Jr. revealed questionable items in the 2026 spending plan that need urgent cleanup. The issue goes beyond numbers, with corruption clouds threatening public trust and the country's creditworthiness. The National Expenditure Program includes allocations for projects that have already been completed or raise doubts of being ghost or substandard work. Budget Secretary Amenah Pangandaman said that she is working with the Department of Public Works and Highways to investigate and remove these problematic items. The palace urged caution, stressing the need for coordination with the DPWH to verify which projects are truly finished before jumping to any conclusions. Senate scrutiny over flood control deepens. The Blue Ribbon Committee has asked the Commission on Audit to turn over key documents, a move that could expose the true cost of alleged ghost projects and their impact on taxpayer money. During the panel's hearing on Monday, Senator Joel Villanueva moved to issue a subpoena on COA's fraud audits. It was seconded by De La Rosa and was approved by Committee Chairperson Senator Rodante Marcoleta. COA Acting Assistant Director Tracy Ann Sonico explained that audit highlights contain evidence gathered and parties involved in the flood control mess. Last month, COA Chairperson Gamaliel Cordoba ordered a performance audit of flood control projects under the government's multi-billion peso flood risk management and resiliency program. President Marcos moves to clean house. An independent body will be formed to probe anomalous flood control and other projects under the Public Works Department, a signal that the administration is trying to restore credibility in infrastructure spending. An executive order that will create an independent commission is being made. The president has yet to identify who will lead the panel, but he says it will be composed of forensic investigators, lawyers, justices, and prosecutors. Its task is to come up with a recommendation to the Ombudsman on the legal actions to be taken against individuals responsible for the questionable projects. The flood control controversy widens. Senator Bongo's family business partnership is under fire over delayed projects that strike at the heart of public trust and infrastructure spending. While denying personal involvement, the senator warns that no one, not even his relatives, will escape accountability if irregularities are found. Hannah T. reports.
The Department of Budget and Management.
Senator Bongo's family entered into a joint venture with a Diskaya-owned company in 2017, St. Gerard Construction, controlled by the Diskayas, partnered with CLTG Builders, owned by Go's father, Desiderio Go. According to a 2018 investigation by the PCIJ, or the Philippine Center for Investigative Journalism, CLTG Builders held only a Category B license from the PICAB, or the Philippine Contractors Accreditation Board, limiting its eligibility to bid for large-scale projects. To overcome this, CLTG entered into joint ventures with bigger firms like St. Gerard. The PCIJ documented that in 2017, CLTG bagged 21 contracts worth nearly 977 million, 3 on its own and 18 through joint ventures. Several of these projects were flagged as delayed or unfinished. Go himself confirmed this joint venture with St. Gerard during the Senate Blue Ribbon Committee's second hearing on the anomalies of flood control projects.
Alam mo ba ang proyekto ninyo na naiulat kasi ngayong araw, ngayon lang, na joint venture nyo raw po ang CLTG? 2017?
I think so, yes, before.
Flood control ito?
I can't remember.
Natapos na bang proyekto ito?
Alam ko tapos po yung mga project.
Nagagamit na ito ng tao?
I would think so, yes po.
But the senator was quick to deny his involvement with his family's business dealings.
24 anyos pa lang po ako, nagtatrabaho na po ako kay former Mayor Rodrigo Duterte. Hindi po nakakalapit sa akin ang pamilya ko para humingi ng pabor sa kontrata ng gobyerno. Yan po ang sinabi ko noon pa. I will resign kapag pumasok po sila sa City Hall or sa Malacanang.
Go warns that even his own relatives wouldn't be spared if irregularities are found.
Kahit kamag-anak ko, kahit involved sa kahit na anuman pong pagkakamali, kasuhan niyo po sila. I am for accountability. Ayoko po ng kalokohan kahit kailan.
Beyond the joint venture issue, Go unloaded a scathing manifestation. He said the 1.2 trillion peso flood control budget from 2022 to 2025 could have built 60,000 evacuation centers, 80,000 health centers, or even 800 hospitals instead of being wasted on ghost projects. Go ended by backing the committee's push for accountability and hold those responsible for what he calls a mess. Hannah T., Bilyonaryo News Channel.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's take a look at how Asian markets are doing this Tuesday morning. Right now, the Nikkei 225 is trading to the upside, up by 0.2%. Hong Kong's Hang Seng Index is flat with a downward bias. Shanghai's Composite is lower by 0.4%, and Singapore's Straits Times Index is higher by 0.4%. Here at home, the market opened the week on a weaker note, extending its slide for a third straight session as traders brace for key data ahead. The PSE index fell by 15 points, or by 0.25%, to close at 6140. Trading was anemic, with value turnover at just 4.2 billion pesos, a sign that many participants choose to sit out and wait for fresh catalysts. Analysts say that the market is in a wait-and-see mode ahead of U.S. PMI figures and the Philippines' August inflation report, which is due out this Friday, September 5th. Over the near term, sentiment is expected to remain subdued, with weather-driven price pressures and light trading likely to keep the index under pressure until clearer signals emerge. Taking a look at the PSE index this morning as of 10:21, the main gauge is flat with a very slight upward bias at 6141, barely unchanged from yesterday's close. All shares index is flat with a slight upward bias as well, up by a little less than 0.1% to 3686. Taking a look at the sub-indices, the industrial, holding firms, property, and mining and oil counters are keeping the market in the green, whereas the financials and services counters are limiting the market's advance. Right now, total volume stands at 177 million shares, valued at 434 million pesos. Market breadth almost neck and neck. We've got 68 decliners, 62 advancers, and 38 stocks unchanged. Taking a look at the currency markets, the peso is trading at 57.22 against the dollar, weaker than its previous close of 57.16. Corruption scandals are shaking investor confidence and raising fears that they could derail the Philippines' economic momentum. Experts warn that if these issues persist, the country risks lower growth, higher borrowing costs, and inflationary pressures that will hurt both businesses and households. Sujin Kim has the details.
So the more frequent we see corruption headlines, then it actually veers away the appetite of investors to the Philippines.
Investor confidence in the Philippines is on shaky ground as corruption scandals threaten to weaken economic momentum. Experts warn that if the controversies persist, the country's gross domestic product could shrink by 3 to 5 percentage points, a loss that would set back development goals and undermine recovery. The constant stream of corruption headlines is chipping away at the appetite of foreign investors. Capital flight is a real risk, and once funds exit the country, foreign exchange markets will be among the first to absorb the impact. A depressed peso would translate into costlier imports, sparking price surges across essential goods and pushing inflation higher.
With the ghost projects, with the certain issues, capital flight, it's actually slashing out productivity. So it would manifest in slower economic growth, slower productivity.
Corporations are not immune. Listed conglomerates, banks, and even smaller firms are increasingly exposed to governance risks.
They are very much exposed. It would certainly affect their earnings because the corruption issue, there will be a tendency for us to pause operations, pause the developments of new projects, and slow down in these kinds of activities.
This vulnerability reaches beyond short-term gains. The country's ambition to become a trillion-dollar economy and achieve upper-middle income status is on the line.
If corruption issues hounds the productivity of the economy, then the upper-middle income status could be pushed forward because, again, of the leakages that are not really contributing to productivity.
Fiscal reforms are also undermined. Rivera says when taxpayers see their contributions funneled into ghost projects and anomalous transactions, trust in revenue collection crumbles. Sujin Kim, Bilyonaryo News Channel.
Markets are under pressure from corruption headlines and new U.S. tariffs, and they're watching out for opportunity in the government's privatization drive. Now, what does this mean for business owners, employers, and jobs? We're joined by Sergio Ortiz-Luis, the president of the Employers Confederation of the Philippines. He's also the president of Phil Export. Good morning, sir, and thank you for being here with us.
Good morning, Maiki, and good morning to all our watchers and listeners.
Good to have you this Tuesday morning, sir. We've got two huge headlines. There's the corruption locally. And then there's also the impact of the 19% U.S. tariffs. Of these headwinds, sir, which would you say is the one that is most worrisome for employers?
Well, of course, it's the corruption and the confidence that is lost for both local and foreign investors, for the tourists, and for our exports in particular.
Yeah, corruption hits us on multiple fronts, sir. It destroys investor confidence locally and it deters foreign investments. Have you felt investors shying away from the Philippines in light of all of these headlines?
Well, before, we were ahead in investment. Now, what we are saying is we are kulelat in our ASEAN, no? With the least, with the last place that they choose, no? Because of all this news. Initially, when we go with the president for foreign trips or investment, not only in this administration, in the past administration, one of the first things they say is the policy changes and the red tape is too much. But fortunately, we have ARTA now, which is correcting this. And I think that is known even by foreign investors. Unfortunately, here comes the corruption issues. And this is the one that is really, has been destroying the confidence of investors. And so if you're choosing between, and that's why we're kulelat, no? Choosing between Thailand, Malaysia, even Cambodia now, Philippines will be the last choice. We are bringing in investment with the effort of the administration, the president, but compared to the others, very small.
It's hard to stomach because the tariffs, they're external forces. We can't do anything about that. But the corruption, that's an internally inflicted wound. So it's very mas masakit, sir. The president has flagged billions lost to corruption, lots to ghost projects, sir. Are you shocked by the level and the magnitude, the depth of corruption, sir?
Well, before we hear corruption, we know there is corruption. We talk to people and there is corruption, but we're shocked at the level of the corruption. We thought we were talking about hundreds, a few hundreds of millions, but we're talking of billions. And that is really shocking. And what is shocking is it's concentrated in many, well, public works, for instance, so much the corruption in that area.
It's infrastructure spending, because these are the big ticket items. And what hurts is, yun yung reklamo ng foreign investors sa Pilipinas, sir. Wala tayong infrastructure. That's what they lament when we speak to foreign investors. What have you experienced, sir, when you speak to foreign investors?
Well,
what do they want from the Philippines?
Well, we always say that there are projects in the pipeline, but mostly delayed now, and some of them are even ghosts.
Yeah. How do you feel, sir? I mean, you ask for budget from the government, budget to, ask for the DTI, for budget for our trade fairs, to promote the Philippines, for product development, for research, for marketing. And they say there is no budget. You have no budget, whereas, you see where it's being spent. How do you feel?
There are two areas which we feel should be funded. It should be looked at by the government as an investment rather than just an expense. And this is the area of export development and the SME. In both areas, we are pathetically behind all our neighbors. And it's no surprise, for instance, that our competitiveness has been eroded over time. And, the budget of DTI is so small, together with the two other agencies, the OST and the ICT, you put them together, they're not even compared to one project, for instance, that I noticed, CCT before. In 2019, I saw the numbers, 87 billion. 15 billion of that is devoted for monitoring only. No? You know, the budget of DTI at that time was hardly 10 billion. Monitoring lang yan. That's not even the project of DSWD, the budget. So now, if you look at the budget of DTI and what's the expectation of DTI, price stabilization, investment, export development, there's no fund. Whenever we ask for export development fund, for instance, they want to say, where will we get it?
And now that you see where the funds are going, sir, anong masasabi nyo?
Well, it's very difficult. Where will they get it? The answer is they would not know because it's lost. So we would like really to see serious budgeting for the first in 2020 at least. Kung pwede lang, start from nowhere, build up from there, all the departments, rather than traditional budget, just adding little every year. So naiiwanan pa rin yung what is needed. No? SME, for instance, budgeting, lip service also. We have the, I would say, the figures show that we are the most unbudgeted, unbanked.
Yeah.
Our MSC is the most unbanked MSC in the whole of Asia. You know, just to give you an example, the last figure I saw in 2018 before the COVID, the money that went to SME is $10.8 billion in the Philippines. You know how much in Thailand? $230 billion. The nearest to us, the lowest, was Indonesia, $76 billion, tayo 10. And I understand, nabawasan pa ng 1 billion, o wala na yata 10 billion yung funding ngayon sa SME. And are we surprised that, our SME has developed? Our SME, pareho ng SME sa, in the region, mga 90% more SME. But our SME is 90% micro.
Yeah, so much to account for with infrastructure spending so that it's channeled to economically beneficial programs, sir. How are employers interpreting the new shift in the leadership of the DPWH to Secretary Vince Dizon?
Very positive. The reason is Secretary Dizon has a good track record and a change is needed. I'm not saying anything about the Secretary Baruan, but a change is needed, fresh start, so that kwentas claras para makaumpisa ng maayos.
What would you like to see, sir? Given all the corruption issues when it comes to infrastructure spending in the country, what would you specifically like to see from Secretary Vince Dizon within his first 100 days in office?
Well, I think it's very easy to see who are the people responsible for all these ghost projects and so I think we would like to see head rollings.
Okay. Let's take that further, sir. How much head rolling do you want to see? Does ECOP want to see these people put in the blacklist? Do you want lifetime bans? What do you think is the punishment that is befitting?
Well, it's really quite obvious that some companies have been dealing in these ghost projects, and I would like them blacklisted for life. Although blacklisted, they will just come back with another name anyway. But it's good to have the blacklist. I would also like the industry association, the contractors, say to blacklist them, because they're the ones who are giving them the grades of how much they can contract for you if they grade AAA or whatever. So and for the people in the department, I would really like to see serious checking. I am not exactly in favor of everybody resigning, because there might be some good career people there who, if they resign, they put their lives into it, their families, and then all of a sudden you are asked to resign, not through your fault. I'm not so sure that is right. But it's easy to point out anyway who are responsible for all this mess. So, wag naman lahat.
Okay. All right. On another front, sir, there's the U.S. tariffs, the 19% U.S. tariffs. It's interesting because the Philippines started, lower than everybody else. And all of a sudden, here we are. We're almost at par. Things are very difficult. 15% of Philippine exports go to the United States. Half of that are electronics. Right now, electronics is still suspended, but that 100% tariff looms. How are exporters adjusting to these higher tariffs, sir?
Well, it's so sad, Karen, that we started with the 17%. Everybody higher than us in our area, and then as of August 10, we are 19%. Everybody else went down to our level, no? And the other one who was raised was Bangladesh by 1%. We were raised by 2%. Every others went down. So I see there's something wrong with the way we're dealing with this. No? We are banking on the fact that we are a close ally of the U.S. No? But I think we are close ally to the past administration, to the agencies that we deal with, the military perhaps, USAID, CIA, whatever. But unfortunately, President Trump doesn't care about that.
It doesn't seem to hold water for him.
He even wants to charge for services rendered Taiwan.
Sir, should the 100% tariffs on our electronics, our semiconductors take effect, what will that do to the
That
industry?
will kill our industry, because there will be advantage with South Korea, Japan, and Taiwan, and they are our competitors in this
And
area.
there's nothing that we can do to revive it once that hits, sir.
Well, we are still backing on the fact that we're allies, but actually it doesn't count to the things that matter to the past administration doesn't matter to
Sir,
Mr. Trump.
a lot of the exporters, you're the president of PhilExport. A lot of the exporters are small and medium enterprises. That said, would they be small and nimble enough? How long would it take them to pivot to other markets?
Well, as you say, while our export to the U.S. is only 15%, half of which is electronics, the electronic industry will know how to take care of itself. Many of them are American companies anyway. They might move back to other areas. But the other ones are the garments,
Very labor-intensive
furniture,
exports, yeah.
coconut products. They're labor-intensive. And they have to find other products, other markets. But that is where we go back to what is necessary. Export needs support.
Yeah.
If we have to develop new market, we have to fund the postings,
Yeah.
we have to fund research, we have to fund exhibitions outside of this, and there's no money.
Yeah. Speaking of, but there's some support. The BSP has cut interest rates to 5%. We're in the middle of that easing cycle. BMI unit of Fitch Solutions, we just had it in the news today. It looks like the easing cycle of the BSP is seen to continue through to 2026. Are exporters, are employers feeling easier access to credit in light of this, sir?
Well, the bigger ones, yes. But again, I go back to the fact that most of our people depending on that are SME, 90% are micro. And many of the exporters are small ones. They will not be bankable, even in those areas. So what we need is development of an alternative help for them. Like, for instance, the Department of Trade has the SB Corporation. We are hoping that while we are giving away money as dole-out, that we can invest in the SB Corporation so that they can come up with packages that is not dole-out. You might be repaid 97 or 91%.
In the meantime, sir, are
maybe
you
50%.
feeling shrinking orders from the United States? Are you feeling reduced amounts of orders?
Oh, yes. In April, when this first came out, we surveyed exporters. 90% says business as usual.
Yeah.
The 10% said their buyers are sort of...
In the first half, okay pa kayo, especially
pa.
as many front-loaded a lot of the work in anticipation for this change in this tariff regime. How are things looking for this second half, sir, and as we enter 2026?
Well, obviously, with the coming of the August, the effectivity of the tariffs, everybody is lower or the same as us, medyo mahirap na. So we are expecting siguro about 2 billion loss already for
2 billion losses
for
this
our
second
export
half for
in the second half.
exporters. Okay. In percentage terms, how much of a drop is that, sir, para maintindihan natin?
Well, I'm not sure of the numbers yet, but our target of $110 billion probably will not be met because
Okay.
of this.
Okay, well, it's sorry to hear that, sir. But on another front, there is maybe perhaps some opportunity. The government is eyeing to raise around 200 billion pesos through a pipeline of state assets, selling state assets in 2026. Are investors scared, locally and foreign? Are they scared to do deals in this environment with the government, especially given the corruption, just given the environment right now? How would you say the temperature is on the ground when it comes to how this might be received?
Well, if this sale is happening in Thailand or Malaysia, siguro overnight, finish yan. But in the Philippines, I think, if I were a local investor, with the issue of cases coming out, with dealing with the government, I will hesitate unless the bidding or the is so transparent that nobody can charge you later on of having a sweetheart deal with the government and even foreign buyers probably will hesitate.
Yeah.
No? So certain hard sell, the others easy because of confidence.
Okay. What can we do now, sir? What, if you could speak to the President Marcos right now, this administration, what needs to be done in order to restore confidence so that, not only for the pipeline of asset sales to be well received, but for a better, for better growth for the country over the next decades?
To me, budgeting is something that is very important. Yung 2026 budget natin, maybe they should start working with in a water na medyo, they look really at where money should go. We know that Constitution provides for instance, which will have the highest. I agree with that. But maybe we should look at really what are the other agencies or other projects that we are not funding, that we should start funding, so that it can be sustainable rather than dole out left and right and not sustainable. Funding is important. And I think the way they will conduct the livestock check now and the cases that will be pursued, people will be watching.
Yeah. Speaking of the lifestyle checks that you mentioned, sir, how far do you think that should go?
Well, I think it should be based on the president should decide how it should be. No? And I think importante na that lifestyle check should not be made political. It's important is they know who should be checked. Let it be done, and let's see that immediately some people are held to account.
Yeah, that's what everybody would like to see immediately, that people are held to account. Thank you so much for your time, sir, for sharing your morning with us and your insights.
Thank you also, and thank you for those who are watching us.
All right. We're going to be taking a quick break. Business 360. We'll be right back. Welcome back. We have this just in. The Bureau of Customs operatives entered the Discaya residence to serve a search warrant for the family's alleged 28 luxury cars. The Discayas, under Senate scrutiny for bagging 31.5 billion pesos in flood control projects, earlier admitted to owning dozens of high-end vehicles. Customs officials are now investigating possible misdeclaration or unpaid taxes on the imported cars. Security initially blocked entry to the compound on Monday night, forcing officials to postpone their operation until Tuesday morning. Heavy police and Coast Guard presence backed the search as authorities promised to enforce the law under the Customs Modernization and Tariff Act. Two of the country's biggest tycoons are making a play in the food business. Ultra-Bilyonarios Ramon and Manuel Pangilinan are buying into the group behind Conti's and Wendy's, signaling stronger appetite for the consumer sector. The Philippine Daily Inquirer reports Ramon Ang and Manuel Pangilinan agreed to each buy a 15% stake in 888 Holdings Incorporated, the firm for the two brands, at 1.5 billion pesos each. The firm is backed by Malaysian businessman Jaya Sudhir. The deal now values 888 at 10 billion pesos. Conti's has 70 stores, while Wendy's has more than 80 branches. The deal has been in the works for several months after Davao-based businessman Dennis Uy left the business. On another front, Bangko bets on technology. The state gaming regulator plans to use artificial intelligence to spot gambling addicts, a move seen to boost consumer protection and safeguard the industry's legitimacy. During the agency's budget hearing at the House of Representatives, Bangko Chairman Alejandro Tenco said they have started looking for AI tools that could enhance their regulatory powers. Tenco explains once the AI detects troubling behavior, it will impose a so-called cooling period and the account will be suspended. The player can only resume once they provide valid reasons to the regulator. Bangko is also looking at AI technologies that can identify risky gambling patterns. Now it's official, ultra-billionario heir Jacob Ang takes the wheel as president of BMW Philippines under SMC Asia Car Distributors. The move comes at a crucial time for the luxury auto market, with growing competition and a shift toward electric vehicles. Backed by strong leadership and family legacy, the younger Ang now steers the brand at a pivotal moment for the premium auto sector. Our mobility correspondent G. Baroga has the full story.
After much speculation over the weekend, it's now confirmed. Jacob, youngest son of ultra-billionario Ramon Ang, has officially been appointed president of SMC Asia Car Distributors Corporation, the exclusive distributor of BMW vehicles in the Philippines. He takes over the role from Spencer Yu, who led BMW Philippines for the past 7 years. Jacob steps into leadership at a time of growing demand for premium vehicles and increasing interest in electrified mobility in the country.
For BMW, I'd recommend trying out our new plug-in hybrids. We will be releasing a lot of new plug-in hybrids this year, and I think it's the best bang for buck that you guys will ever get in the market, at least from here on out.
So far, BMW has already brought in 3 plug-in hybrid models this year: the X5, the X3, and most recently, the M5 and M5 Touring, with Jacob front and center at every launch. In a statement, RSA says his son's leadership and fresh outlook will help solidify BMW's presence in the country even further. Jacob first entered the local motoring scene in 2023. And with his exposure, his father believes he is ready for this new challenge, not just for the brand, but also for its customers. For Jacob, it's an exciting time for both the premium car industry and BMW Philippines. He says his focus is on innovative and effective customer service and keeping BMW at the forefront of the luxury auto market in the Philippines. In previous interviews with BNC Mobility, Jacob shared that he's genuinely excited to help manage the family's motoring empire. Apart from BMW, SMC also holds the local distributorship of Ferrari through Velocita Motors, where Jacob serves as Chief Planning Officer and Director. For BNC Mobility, G. Baroga.
Elsewhere in the world, a deadly quake rocks Afghanistan. Powerful magnitude 6 earthquake struck eastern parts of the country, killing at least 812 people and injuring nearly 3,000 others. The disaster highlights the vulnerability of poorly built communities and the heavy human cost when infrastructure fails, a risk many Asian countries, including the Philippines, also face. The quake hit near Jalalabad, with the worst damage reported in Kunar province's districts. Rescue teams are struggling to reach affected communities due to rugged terrain and widespread devastation. Afghan officials have begun emergency relief efforts, but survivors are calling for urgent global aid as entire families remain buried under the rubble. Elsewhere in the world, tensions escalate in Latin America. Venezuela President Nicolas Maduro accuses the United States of plotting to unseat him as a U.S. naval buildup intensifies in the Caribbean. The standoff highlights geopolitical risks that could ripple across energy markets. He cites this as the reason for the U.S. naval buildup at the Caribbean. But U.S. officials say the deployment aims to address threats from Latin American drug cartels. Venezuela's government has shrugged off U.S. allegations that the country and its leadership are key to major international drug trafficking.
8 barcos militares con 1,200 misiles.
8 military ships with 1,200 missiles and a nuclear submarine are targeting Venezuela. This is an extravagant, unjustifiable, immoral, and absolutely criminal bloody threat. They have wanted to escalate what they call maximum pressure, which in this case is military. And in response to maximum military pressure, we have declared maximum preparedness for the defense of Venezuela.
A proud moment for business broadcasting. The Bilyonaryo news channel is honored at the Tagapanguna sa Himpapawid, or Leader on Air, at the Saliksik at Balita Media Awards of the government think tank Philippine Institute for Development Studies.
For bringing and boosting public understanding of PIDS research results and policy recommendations to policymakers and the general public.
BNC emerged as one of the biggest winners, capturing 2 out of the 6 awards given this year. In a moment that underscored the channel's role in shaping economic conversation, BNC business reporter Sujin Kim was named Boses ng Talino, or Voice of Intellect, for her evidence-based economic reporting.
As journalists, our role is simple. It's to take complex policy research and transform them into stories that reach you. Evidence-based reporting has always been my core. It is ensuring that truth, context, and knowledge drive our national conversations to empower more Filipinos to make informed decisions.
And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo news channel.